Sunil Subramaniam, market expert, to talk to us about how he's viewing markets. Sunil, good afternoon. Good having you here. Let me start off by setting the context up. We've seen a large consolidation over the last year or so. Largely, the markets are driven by earnings, and we've seen muted earnings as well over the last year or so. But markets move before earnings start to move. When do you expect that move to happen on the fundamental side? Give us that sense.
I would say that only by the January quarter numbers, because it's only in the second half that we expect a recovery in the earnings. See, what's happened is that the GST announcement actually led to a postponement of purchases over this quarter. Second is that there's an overall headwind which was there, for example, IT and other services because of the US slowdown. So a combination of these factors, and the fact is that in the GST, the GDP numbers, though they have come in strongly, it's not reflected yet in the earnings because there is a time that it takes for the government expenditure and all to pass through. So I think that the earnings has been muted, and this particular quarter, starting from the 10th of October, would continue to stay in the large cap space in a reasonably single digit kind of a frame only. So it's only when you have the festival season sales, top line numbers coming through and reflecting in the bottom line from the January earnings, I do expect that the second half will be better than the first half. So if you are expecting an earnings-led recovery to happen, I think that you have to wait for the January earnings.
Interesting. Sunil, soon we'll have the earnings season kickstart, and it's going to start off with the main board IT services plays. You think there is anything worthy of material that one can expect this time?
You're asking specifically from the IT players?
Yes, Sunil.
Yes, lots to look forward to. So first of all, I think that the correction has been a bit overdone with the impact of the H1B on the Indian IT companies. I do not think that the impact as severe. Last year, the top 5 IT companies just got 13,000 H1B visas. Their business model has shifted largely to an onshore, nearshore model for the local work in the US. So I think that the market reaction was overdone, and I would like to see TCS starting their commentary on how much the H1B is actually going to affect. That's going to be interesting. The second thing this quarter is that, see, the rupee has weakened. So actually the earnings should get a tailwind from the rupee depreciation in rupee terms. But on a constant currency basis or on a dollar-based earnings, it'll be interesting to see how they are looking at it. That's the second part. The third aspect is the big deal wins, right? Because there's been a lot of apprehension that in the US, because of the tariff-related slowdown expected, that big deals were not coming through. And TCS commentary last time around was indicative of that. Is that situation changing? Are they now seeing a revival in big ticket negotiations happening? And fourth and finally, of course, the question on everybody's mind, how is TCS dealing with the AI-related challenges? Now, there I have a slightly contrarian view that any job cuts, job rationalization actually good because it indicates that the company is shaping up its staff to cater to the AI part and letting go of those who are not probably stepping up. So market, I know, didn't take those 12,000 job layoffs very well, saying that no, they are under pressure. But it's a smart thinking by the company. And I would like to hear about how they are approaching the AI space in terms of fresh hiring from the colleges, as well as any acquisitions they are planning in the AI space. So lots to look forward to in terms of the IT services space.
Right, okay, that's the take coming in on some of the IT services plays, but can't get your eyes off from those consumer tech companies. Kunal, Nykaa, Delivery, Eternal, Paytm, it's a problem of plenty today. Anywhere where you think the rally is sustainable even after the big moves today?
So Nykaa and Paytm are the two stocks which I would believe even at current levels, I think traders could look at a buy further for both of these stocks at current levels, because both of these stocks have come out of their massive consolidation period. So I think in September 2025, just about a month back, Nykaa made a high which was closer to 245, 250 range, and then it went through a grind or a correction back to the 230, 235 kind of a support range for the stock. And today the stock has managed to break past about the previous swing highs. So this is a classical breakout for Nykaa, and this reiterates the move which has been started off for the stock, I think around 3 or 4 months back, where the stock has been consistently making higher highs on the monthly charts. So this almost reiterates the pattern for the stock that it's into a medium-term uptrend. And with this breakout, I believe that now we could be looking at higher targets of even 275 for the stock potentially over the next 1 to 2 months. Paytm on the other hand, I think after that 15% kind of a correction from 1250, 1260 to sub 1100 mark, again in the month of September, I think the stock has made a very strong comeback. It's back about again about the 1200 mark, and the kind of candlestick pattern which you've seen for the stock at sub 1200 levels, the V-shaped recovery for the stock price indicates that even this stock could probably try and challenge the previous highs of 1250 plus. So would look out for a further upside of at least another 50 to 75 points on Paytm over the near term.
Okay, so moving from some of these platform companies to more traditional financials, and Sunil, the move today, especially with regard to banks, has particularly been strong, and that's because of the kind of numbers we saw from the banking sector in terms of growth. Did it surprise you? Just trying to get a sense.
Yes, honestly, a little bit surprised with those numbers because the mood running up to the whole quarter was not great, in terms of especially the fact that postponement of consumption, which means loan book growth, and there wasn't yet significant private sector pickup. Government capex has its own challenges in terms of. So I think there was a little bit of, and the fact that from an interest rate perspective, the pass on was actually not happening through very much. So to that extent, one was apprehensive a bit about the numbers they come in, but you're right that those numbers are pleasantly surprising on the upside and seen in the uptick in the banking. And I think the coming festival season should strengthen this even more because of the EMI related loan demand, which should filter in.
Right. Kunal, let's revisit some of the larger banks and NBFCs as well. Bajaj Finance, HDFC Bank, all reacting to their quarterly updates. Any meaningful move that you spot which you think is sustainable?
So Axis and Kotak Bank, yes, I think on the large cap private sector banking names, that's a very big move for both of these stocks. And I would actually believe that this could be a re-indication of the fact that the private sector banking stocks performance is shifting back towards the few larger cap names. HDFC Bank coming back to that breakout just around that 975 mark where it's trading right now. It's almost like a double bottom breakout for the stock, and it's a 25 to 30 pointer pattern for the stock. And given of course, the high weightage the stock has both on the Nifty as well as on the Bank Nifty, this could be a very strong and a powerful move for HDFC Bank if the stock completes this double bottom formation. From the NBFC pocket, I think Bajaj Finance has made a very strong comeback, and I think over the last 1 or 2 months, it may seem that the stock would have been very volatile in terms of the charts, which is not typically the beta of the stock price, because inherently the beta for Bajaj Finance is somewhere closer to 0.8 to 1. Depending on the market conditions. But this time around, the beta for the stock would probably have been around 1.3, 1.5 for the stock price. So that's why you might see the stock behaving a little bit more erratically. But then, when we look at this over the period of the last 2 months or 3 months, I think the stock has done fairly well for itself, climbing from those 750, 800 mark towards 900, 950 zone, and now scaling past about the 1000 levels yet again. So I think Bajaj Finance is also something which looks interesting at current juncture. The other stock from the entire space is L&T Finance. I think that's also something which has done reasonably well. It's been moving in a more consistent and a gradual upside, crossing the levels of 240, 250 plus. So I think at current levels, this also is another stock to look at.
Okay, that's that within the financials. Just want to look at the weak links as well and look at Avenue Supermarts. A weak second quarter update. The standalone revenue from operations is lower than what the consensus estimates were. However, it may be up 15.4% on a year-on-year basis, but what the street was anticipating, it's a good 5.5% below that. The quarterly store addition at 8 has been the slowest since the second quarter of fiscal year 25 that they have seen. Sunil, if the entire GST transition is to play, models like Avenue Supermart also would tend to benefit, right?
No, not necessarily, because you see, the Avenue Supermarts of the world are dealing with day-to-day products and regular products. So you get a saving there. You don't go and buy more atta. You don't go and buy more hair oil. You don't go and buy more of these consumer staple-related products, right? What you would do with the GST cut is to go into the consumer discretionary space, the high-end retail, the consumer durables space, auto, as we are clearly seeing, and maybe with a bit of delay after the festival is in reality. So honestly, the FMCG consumer staples space, I think that it'll get a steady growth, but I don't expect a big pickup in GST because of two other factors. One is that in certain cases, the packaging will remain the same. They'll increase the quantity. So which means that there'll be some top line growth because with the same amount of rupees, you're getting maybe 10 grams more of the biscuit or whatever, right? So there will be good top line growth. But in other products where you can't do it that way, right? I'm sure those will go as savings into customers' pocket and not necessarily higher demand. So overall, at the lower end of the consumption curve, I'm pretty much stable in terms of this. I expect the real GST effect to be in the high-end consumer part.
Okay. You know what we'll do? We'll slip into a very short break. Stay with us, Sunil as well as Kunal, of course. And what we'll do is, once we're back, we'll talk about hospitals because healthcare is one space which is buzzing. We'll take you through a couple of conversations we've had, and thereafter, quiz Sunil and Kunal on just that.